His problem was he wanted to write $1 million checks. And I'm like, what? $1 million? Right? And all of a sudden, my entire mindset shifted from my little problem a second ago to how do I find a bigger deal? And it's only because I found one other person in that relationship. Hey, deal makers, and welcome to the show where it's all about financial freedom with real estate. Let's do this. So there's a special episode because people told us that they actually like the banter. The banter part of our podcast where Garrett and I kind of banter about hopefully useful things. And that's what we're going to do today. We have a variety of topics we think might be of interest to you. Well, guess what we're going to do today on the show? It's going to be Garrett and I fireside chat with Uncles Garrett and Mike. What do you think of that? Before we get to that, I want to give a shout out to Jamie Lynn Hagley, who's left us a review on Amazon for the Yellow Book. She said, this book is an excellent read and I'm ready to learn more. It's easy read and full of very helpful information. Well, thank you so much, Jamie. I appreciate that. If you have not checked out our Yellow Book, it's called Financial Freedom with Real Estate Investing. It's on Amazon and it's yellow. And it gives you a great introduction into the world of syndication. So check that out here as a great follow-up to this podcast. We're always looking for people that have done a deal that we've helped in some way. And so today our first deal makers are Caitlin Wen and Jeff Rodriguez. And they successfully acquired a monster deal. Okay, 304 units in Alabama, valued at almost $20 million. They had two mentors because they're both students. They ended up joint venturing with each other, and it was Matt Bronner and Philippe Schuligan who were their mentors. And all of our mentors are full-time syndicators that have done hundreds of thousands of units as well. So if you've done a deal and we've helped you in material well, just tag us on social media or email us at support@themichaelblanc.com. With that, let's bring in our co-host, Garrett Lynch. What's going on?
What's going on, Michael?
All right, so we're going to do a bunch of banter. Okay, normally we just banter on one topic and we can get out. We don't have a guest today. It's just you and I. And let's see, what shall we talk about? Oh, yes, we just recently closed on a refinance. Now, this is important because we actually have a small number of variable rate loans in our portfolio, which at one point were a good idea and now are not so much a good idea anymore because of 11 consecutive interest rate hikes that we went through. And despite some interest rate caps, they are now becoming slightly problematic. And so we've been trying to refinance out of those into fixed interest loans, and we were able to do that on Friday.
Yeah, this was a monster win. It's difficult in any environment to overcome that many rate hikes that quickly. And so that was something that we really, I don't think anyone really planned for. And the fact that we were able to pull off a refinance, even in that environment, just speaks to how well we've been able to execute on the business plan of this asset. And this one exceeded all expectations by more than 10%. So we were ahead of pro formas on everything, even in this environment where we have rent sliding and different things like that happening. And it was really an amazing feat to see this happen. We also closed this thing in 25 days, which is the fastest closing that I've ever done in my entire career.
That's insane right there.
When we started it, I didn't know if there was a chance that we could actually pull it off in that amount of time. We really had to do it in that amount of time because of some special circumstances which would blow up the deal in relation to the taxes. So we were able to, we had to close it on Friday. Come last week, Thursday, we were running into some big issues with vendors and insurance and other people just not doing their part to get this closed, and worked night and day all weekend, pushing on people to get what we needed, and just barely landed a rate lock on Wednesday. And once you land the rate lock, it's really the bank's problem to get that thing closed at that point. So once we got the rate lock, like last minute Wednesday, we knew we had a shot at closing on Friday. And then we ended up pushing everything across the finish line. I had a notary coming to my house every single day, multiple trips to FedEx, getting Michael and Drew to sign things also. I mean, it was just crazy effort where there was over 40 people involved to get this thing across the finish line, including the management company, title, insurance, all of our team and just everyone in general to get this thing across the finish. It was insane. It was like, it felt like it was bending space and time to get this thing done. Being up against the clock, it's amazing what you can really do in the amount of time you never thought you could. If everyone's rowing in the same direction, you can just do exactly that. And that's what happened this last week. And so it was a big win for our investors. Big win for everybody that owns that deal and that's involved with it, and obviously the new bank and everything. So it was really, really cool.
Yeah, for sure. And I always say that the problem with these interest rate caps that we all bought 2, 3 years ago, which is buying insurance against rising interest rates, those become very problematic because they got so expensive. So interest rate cap that may have cost $40,000 2 years ago now costs $1 million. And so the problem with that is it doesn't really matter in that sense whether you're a good operator or a bad operator. It's a problem for any kind of operator. But the difference in this deal was that the performance made a difference. So in other words, being 94% occupied is a huge win over say a property that's only 85% occupied, and really allowed us to get into this kind of refinance. So this is where strong operations really pays off, and it really gave us a lot more options than if the property were only 85% occupied.
Yeah, I mean, when you have these types of situations behind the scenes with the capital stack, I mean, there were other things that happened that you just were more of like a handshake type thing. Like I had to fly in to meet the owner of this lending company and basically schmooze with them to make sure that we could get the deal done. And it was a negotiation the whole way because their banks are going to come to you with their, the most advantageous deal for them to start. And you have to know how to maneuver the negotiation to get it to be most advantageous for you, where everybody wins. So that also played a huge part in it. There was a mezzanine piece in this specific loan, and they wanted to shift their current pay, which is the amount that you're paying through the life of the deal. They wanted it to start at 8%. We had to use different methods to get them to agree to do it at 6% so that we could get enough proceeds to knock this across the finish line. And so that was a huge part in it. And if I had not flown into San Diego to meet the owner of this company, we would not have been able to do that. That was like one very pivotal and important moment that required time and forward thinking to be able to do it. It was like at a his specific party at a restaurant in San Diego. Showed up just for that. That's the only reason really I made the trip to NMHC was for that meeting. And that made all the difference. And then we had the groundwork set. Then all we had to do was execute. And it seemed impossible, I'm not going to lie, but we just didn't even think about it, put our head down and did everything we could to push this thing across the finish.
Now, fortunately for you, you love schmoozing and negotiating. So was that kind of fun for you, or was it more on the stressful side, or maybe a little of both?
So I think it's always stressful. Like just in general, entrepreneurship is stressful, right? Like most of the time you're stressed and you're trying to figure out like how to maneuver something, but then followed by moments of like brief happiness and then back to like getting your face kicked in. And that's just generally what it's like. But it was a combination. I think most of the time it was like, I don't know if this is going to work. And then the clouds like cleared and all of a sudden it was like, wow, this is actually okay. Like we're fine. You're going to think you're dead like 50 times before you're not. And that's how any closing is. Any deal that you're trying to pursue, you're like, well, this is it. It's dead. And then it's like, whoa, where did this guy come from? Like something silly, the insurance. They're like, there's no way we can get this insurance done for the next, it's going to take us at least 2 weeks. And this was like the week before closing. And I went nuts on the insurance agent. And I was like, listen, there's no way, guys. We have all these deals with you. It's going to impact our relationship, our overall relationship. If you can't figure this out in the next day, you have 1 day. They figured it out in a day over the weekend. So
25-day close. I mean, that's
25-day. It was,
that's insane.
And that is just one example of a series of things that happen along the way. Like we didn't know if they would agree to let us do 6%, the current pay, and without that, we couldn't do the deal. So it was a very like switching on light switches along the way. And if you couldn't switch one on, you wouldn't win. Like you would, it wouldn't work.
Christmas chain. One light is not working in the chain. The whole chain will go out.
Yeah, exactly. Like just exactly like a Christmas light chain. And so you
chain.
have to click them on in sequence. all the light bulbs have to be working, and they have to be. It has to turn on the entire thing, right? And so like all you're doing is like replacing light bulbs the whole way.
Entire time.
It's a good analogy. Yeah.
Now it brings up the question, listen, people say, oh my gosh, I can't believe what you're going through. Like, this is awful. It sounds to me like now is pretty much a bad time to invest in multifamily, right? What's your response to that? Let's talk about that. Hey, should people just wait and see what happens a little bit? Is it maybe like, what is your feeling about that? Wait and see or get involved?
I understand why people are thinking this way. In fact, I was at an investor event over the weekend. One of my buddies was throwing, and I actually got to talk face to face with multiple of our investors. The sentiment is right now, if you did a deal recently and with any operator, and it's in a variable rate loan, you're probably not getting your distributions. You may be in a tough situation where you have to consider a capital call or something like that. And so there's this overall sentiment of like, you know what? Multifamily sucks. It's not where I want to put my money. I'm not comfortable with it because of what's just happened. I don't think it's a good investment even. People are thinking that way. A lot of people are. And I mean, I said, listen, I understand what you guys are going through. It wasn't with us, but it was with a different operator. I'm like, I get it. I get why you're thinking that way. It's you guys are just kind of blanketing the entire industry as a whole. But the reality is that you know in any with this is with stocks, this is with any kind of asset, the goal is to buy low and sell high, like that at a certain point. And there's a trade-off. Now you have these multifamily apartment complexes where maybe they're not spinning off as much cash as they used to because interest rates are higher and it's eating into it, but the pricing has gone so far down. There's no way that these things are not going to win with enough time. We saw the peak, so we know where things peaked out and we know how far they've fallen. That is clear. And so because of that, we can see that the things are down 40, 50%, anywhere from 30 plus percent, that everything has dropped. And so it's a really good time to take advantage, but everyone's scared. I get it.
Right. And that's the problem. That's the problem right now is we're seeing this opportunity right now, and it's harder to raise capital. And not so much from new investors per se, but from investors who have been investing in this for 1, 2, 3, 5, 10 years. Those investors kind of see what's going on over the last couple of years because maybe they've invested in some variable rate properties and they're being affected in a way that you just described, Garrett. The frustrating part to us is we're actually seeing opportunity. We're seeing buying opportunity. We're seeing buying opportunity in an asset class that is fundamentally strong. We have unprecedented demand for affordable housing. You can't build affordable housing. The only thing you can build is Class A housing because of the cost of construction. So that's not going away. So if you can't build more affordable housing and the population keeps growing, what's that going to do to the rents? It's going to drive up the rents. That's what's happening. And the sellers back in March of 2022 at the height of the market wanted this gigantic price, and now the market dropped, and so people are like, I don't need to sell, I'll just wait. And now that's been a year or so, and sellers are now starting to come down off their pricing, and we're starting to see deal flow come up. We're also starting to see some more distressed assets coming to market as well. So we're seeing this buying opportunity, but like you said, people are afraid. And this is this counterintuitive thing. If you replay it back to March of 2022, the height of the market, probably we should have bought less. People should have invested less. But no, everybody and their grandmother got into multifamily, right? Kind of a sure sign that the market is overheated. And now it's exactly the opposite. Now everybody's like, no, I don't want to get in. I'm going to wait and see what happens. And we're going to collectively miss the boat on what I think is going to be one of the biggest wealth creation opportunities since 2008.
It is absolutely one of those times where it's just like what Warren Buffett said, where it's like, be fearful when others are greedy and greedy when others are fearful, right? And that's absolutely true right now. It's just difficult to see past what's happening if you've already done some of these investments and not going exactly your way.
And this is this difference between sophisticated investors and less sophisticated investors. And you know, here's the thing: we're all affected by emotion. But there was an article in the Wall Street Journal recently about some kind of equity fund, private equity fund, literally in billions of dollars going after office space in San Francisco, which of course has been in the news about how empty they are and it's distress and it's going to hell in a handbasket. All of a sudden, someone comes up with $2.4 billion to buy up this essentially half-empty office space, right? That's exactly what they're doing. They're getting into something where everybody has run and is still running and hiding from this office space. And they're like, oh, interesting. I know something you don't know. And they're going in big. And I think that's what needs to happen collectively. All of us. We can't be afraid to pull the trigger on a deal, right? Because we know that we're getting unprecedented opportunity. Also, our investors need to understand that stuff that happened 2 years ago is vastly different right now. We need to collectively overcome our fear and really look at what's going on right now, educate ourselves, and look at these deals and see that the opportunity is different than it was 2 years ago.
Yeah, and I get there's other people out there that might be like, well, why should we trust you guys because you were wrong before? And I understand that thought process, but that was we had two black swan events back to back, and there may be another one, but there was a black swan event that pushed things in the direction that favor of multifamily, then another one that pushed it completely against it in a very short amount of time. And in history, there's always some version of that. We had, but maybe not two back to back like this, but the chances of there being a third are probably low, I would imagine. And we've already gotten past the worst part as far as what we've seen with this inflection up and down. And so that's all related to markets and the economy specifically. And so because we're past that, we can see a lot more clearly into the future. We don't really know where exit caps are going to be in a certain amount of time, where interest rates are going to be, those things. But we know how to protect the downside big time now through lower leverage, through fixed rates. And we also know that the pricing is very far down in the other direction from where it was, which is a really good sign. And history will tell you that it's a good sign. That's when you need to buy. And so could we be wrong again? Absolutely. But we've been doing this for long enough where we've seen a lot, and we know that these assets are still very sound, and we know how to operate them and run them. And so we just protect the downside on future deals. We can do a lot of good things on these things to push them in the right direction. So one thing about us, we're extremely resilient, and we have a lot of knowledge and experience in the space. So I think when you have that the odds are stacked in your favor in general.
So let's pivot a little bit from kind of high market and should I get started? The answer is, of course, look for the opportunity right now. Be smart, but look for the opportunity. And let's talk about raising capital and what I hear a lot of people complaining about. I really always have, but they complain about not being able to raise enough money. They're going to run out of people in their network. And what are they going to do once they do that? Now, the truth is, if you follow our process, we call it the Dealmaker Blueprint correctly, you'll never run out of people to talk to. And it doesn't require you to become a master networker or some kind of online marketing ninja or something like that. And so the answer to that really is referrals. Now, you told me the story about Cutco Knives, because you worked for Cutco for a time. And how did Cutco train and solve this problem? Because you didn't run out of leads to call on. Why was that? And how can people apply that same principle to raising capital?
So when you're selling Cutco, it's basically like, it's not really door-to-door knife sales. It's more like warm leads, knife sales, like kitchen knives. And what most people do is they enter into the program and they visit their friends and family, and then they run out of leads, and then they can't continue to sell knives because they have no more leads. So they can't go visit, do appointments, sell more knives, and then they just stop doing it, and that's it. So for me, I got started at a time where, first of all, I had a pretty big why, which I've said before in different podcasts what that was, but I had a lot of money I owed, and I had to pay it off. So I needed to make money quickly. So my friends had actually gone to all my friends and family already that were in the program. So I had to start. I didn't even really have a long runway with the friends and family. And so I got really good at the other side of it. The only way you can last in this business is by getting referrals, getting leads from other people, warm leads. And so the way that you did it in Cutco is you had a specific thing that you would say. It was scripted out, and you had to deliver on it, and you said it at the end of every appointment. And then you had a couple of things that you could do to help influence people. The way I would do it is I would start out the appointment and I'd say, hey, I need you to get me three things: a penny, a piece of fruit, and then I need you to get me your phone book. And back then they had those phone books that were like the personal phone books or whatever.
Uh-huh.
And so they would go get a penny, the fruit, and the phone book, and then I'd cut the penny, I'd cut the fruit doing the thing, and then at the end I'd ask for the leads. I'd say, all right, this is the most important part. Here's what I need you to help me with. And then there was a whole script. And then I'd be like, I need you to go find me the numbers for these people. You'd have them write down all the names of people that they knew that were good friends of theirs without anything, just their names. And I'd have them do that in front of me. And then they'd say, okay, now I need you to find the numbers for them. And they'd be like, well, I don't know where that is, like how I can get those quickly. And I'm like, well, your phone book's right here. Remember, you got that for me in the beginning.
I can help you with that problem.
Yeah. So then they're like, oh, okay. And then I'm like, all right, listen, I'll make it a little bit easier for you. I'll give you this peeler if you can get me up to 10 names. And then you'd ask them to call these people and reach out to them for you. And it was like all like in a favor or whatever. And it wouldn't always work every time, but you always tried. every time you took shots, and eventually you get enough lists to be able to have enough people to call and set up appointments. And if you go see one more person, they can get you a list of 10 people, and you keep going. And that lasted me for 6 years.
It's crazy.
And so how that could be applicable here is if you're raising capital, everybody, if there's people that have the money to invest into an apartment deal, they know other people that have the money to invest in apartment deals most likely. And so asking them for referrals is something that I don't think a lot of people think about right away. And it's a very easy way for you to, once you build rapport with them, hey, do you know of anyone that this could really benefit the same way it's going to benefit you? We'd love to just share this opportunity with them and see if they're interested. Who can you think of that I might be able to just talk to for 5 minutes? And low commitment, like 5 minutes. Like we're not gonna do some whole presentation or anything like that. And getting those kind of warm leads will lead you to more people. In fact, we on our intake calls, we ask our intake calls for if they know any friends that would be interested in checking out one of our deals, and that's something that we've put into the program just to get more people. Also, if you've already done a deal and you have people that are in the deal, and that's been a good process and a good experience for those investors, asking those people for more referrals, more leads. How many people out there are doing that? Probably not a lot. So you have that ability that you've already sold. They already have the product, and they're already having a good experience with it. Those are the easiest ones to get referrals from. And that was another thing in Cutco is I always tried to sell to people that already had it. So there was another program where we go and visit only those people that owned it and sharpen their knives for them. And then you'd upsell them into something else because they already had the product. They already were sold on it. And that was a really easy way to continue forward also. And so those are some tricks that you guys can use to continue to raise capital and continue to find people to invest in your deals through those warm leads.
Yeah, that's a great tip. I love that, because if you follow this advice, then you'll theoretically never run out of leads. Because if for every person you talk to, on average, you get at least one of the referral, you're never going to run out of leads. Right now, you can get 10, and now I guess you can actually start building a list. So that's pretty cool. And then what you can do is actually put everybody you meet and you put them in an email system, and you stay in touch with them. You basically create your own mini email newsletter and just stay in touch with people. And you build a rapport with them. You send them text messages, and you get very intentional around those things. But that's a great way to keep meeting new people to raise capital. So now, thanks for that, Garrett. What if 4 videos could give you everything you need to build $10,000 a month in passive income in as little as 180 days? I've proven it many times over, and so have hundreds of other people just like you. And one of the best ways we've discovered to reach financial freedom is by investing in apartments. Now, I know that sounds like super advanced, but the truth is you can get started today. You don't need years of investing experience. You don't have to have millions of dollars in the bank. So register for the free Masterclass Apartments 101 today and take that first step to really discover how you can build true wealth for yourself and your family. Let's do this.
Yeah, absolutely. So I'm going to turn this over to Michael, actually, and let's talk about new investors thinking that they should get started in real estate by house hacking, wholesaling, flipping, or like other BRRRR methods. There's other like residential related methods. What are your thoughts on this, Michael?
No, I can understand that. I mean, you're asking how does someone get into real estate, and when you read Rich Dad Poor Dad, he just uses confusing words like real estate investing. And you're like, all right, cool. Well, what kind of real estate investing exactly? When most people watch Flip This House and that and the other thing, they read about the BRRRR method and they're like, oh, well, surely it must be one of those methods. And so I can understand why people gravitate towards that. It also, people understand and have a comfort zone around a single family house, right? Because they typically live in an apartment or a house or some sort, and like, well, I could see myself owning one of these things. The barrier of entry is a lot lower. And I thought the same thing too. And so I thought that, well, to get started with real estate and to basically pursue the path that, Kiyosaki outlines in his book would require real estate investing of some sort. So in my case, I flipped houses, and I flipped out 3 dozen houses in 3 years until finally I realized that flipping houses wasn't passive. Like, if you're not buying, fixing, and selling, then you're not making money. So I was scratching my head, and I was like, well, maybe I can stop selling them and just build a portfolio. But then my problem was, if I wanted to make like $10,000 a month and I can make each house cash flow $200, which was a challenge, I'd need 50 of them. I just get done flipping 3 dozen of them. I'm like, holy cow, it's going to take me 5 years to build a portfolio of 50 houses. And then how am I going to finance that? And then how I'm going to manage all this stuff? Like, it was insane to me. And I got like irritated with the whole thing because I was like, something is broken in the world of real estate investing. Like I can't get there. And maybe you watching, listening to this have your own experience with single family house investing, or you know someone who has, and you're scratching your head as well. And that's when I accidentally got into an apartment building in 2011, a 12-unit apartment building, which was a nightmare in itself, a discussion for another podcast. But the point is, it started sending me like $1,500 a month in mailbox money. And however, it wasn't nearly as exciting as flipping houses, Garrett. So it was kind of on the boring side, but it was also on the passive side. And that's kind of when the light bulb went off. And I was like, my gosh, I got to do more of this and stop doing these things. And now, having done it since 2014 and taught others to do it, we now know that it's nice. It's nice to get started with single family house investing. It's better than not getting started in real estate investing, but it's not necessary. So what we're trying to do is we're trying to reach people with a message of financial freedom with real estate before they waste 5 or 10 years investing in real estate. So that's, Garrett, what I think about single family house investing.
Yeah, and listen, there's kind of a hybrid. You can start with small multi, and maybe that's a good way to get your foot in the door. I think it's better than, like you said, better than doing nothing. But the multifamily game is much different than residential, and you could just get started on that path. And some people look at it like, oh, the barrier to entry is so much higher. It's really not. It's just a different skill set.
So how did you get involved? Because I know you were obviously hot and heavy in apartment buildings yourself. You had a portfolio of 3,000 units with a previous partner. Did you do any real estate investing before then?
So I got started wholesaling, where we basically, like, I learned it was wholesaling like really nasty D-class properties, but it was like Section 8 stuff.
You love that. Yeah.
And I don't know, like I wasn't scared of like the hood. Like I was fine with I kind of thought it was exciting to drive around those parts and make deals happen, all this stuff. And it added a whole level of complexity and chaos that I would never go back to. But I knew I had the sales skills underlying, so I could sell these wholesaling deals essentially to investors. A lot of them are from Canada, actually. And that's how I got my foot in the door, was making those fast checks from doing transactions. Similar to like house flipping, but you don't actually do any of the rehab. You just kind of make contracts, buy them, figure out like what you need to pay the seller, and then figure out what someone will buy it for, and then you make the middle, right? And so that was how I got my feet wet on it. And then it wasn't until I went to work for a guy that already owned 1,000 apartments, like actually became an employee of his, till I understood what's entailed in the bigger game. Like I had to learn it somehow. And then when I learned it in that 6 months, I was like, with my friend, I was like, we have all the tools to do this. We can do this ourselves. We don't need to like work for someone to figure out. We kind of like connected all the dots from wholesaling into buying apartments. And then it was just a matter of finding the investors and putting the money together on the asset class we already knew. We already knew how to make money with wholesaling and on these lower tier properties. So we're like, let's just go buy some of those to start. And then once you got to that point, then it started to take wings and evolve into something bigger. Then you're like, oh, we bought a 2 million. Let's try to buy a 4 million. Let's try to buy in a better area. Let's try to, go in this direction, self-manage. So it just kept, like, in 3.5 years, we were able to amass over 3,400 units. And that was from just starting buying in the hood. And that was the low hanging fruit. And I wouldn't suggest anyone just starting there, but you could if that's that. Where is your comfort level? Where's your barrier to entry that's going to keep you from entering in? It starts somewhere. It starts at some kind of lower point. And I think the biggest difference between those that just transact and those that actually own deals is your ability to raise capital, right? Your ability to get other people involved or find partners that can help you get a deal done. But you're only restricted by that, I think. And that's the main thing that I think that is different. But if once you get into ownership of these multi deals, it can take a lot of different directions quickly. And that's what's so cool about it.
I just find that we're all held back by different things. And one of them is knowledge. For example, I didn't know that you could raise money to buy real estate with. Like you just mentioned it. Huge aha moment, right? Sometimes limiting or even false beliefs hold you back. For example, there's no way I can get started with apartments because I don't have any previous real estate investing experience, or I only have a single rental. Or there's no way I can do apartments because I don't have the money, right? And it's just even my own experience, these limiting beliefs, these false beliefs, and lack of knowledge really have always held me back. And then the fourth thing is comfort zone. I think you mentioned as well, is comfort zones always hold us back. And so the question is, how can one expand one's comfort zone? Like, what are your thoughts about that, Garrett? How can you, or how have you been able to expand your comfort zone? Because obviously you weren't born doing a $40 million, deal, and you weren't born to do these things. You kind of somehow are able to step over your comfort zone. What has kind of worked for you?
So I think a lot of it is, I don't know, I've always been drawn to like if I have someone, I'm fairly competitive. And so if I have people around me, either peers or partners or anyone, I feel like I need to showcase the skills that I've had or whatever it is to perform in a certain direction. And so I actually get a lot of energy from having people close to me that we're working in tandem to get something accomplished. That's been helpful for me. So like if I was just solo on by myself or whatever, I wouldn't have that same pressure. And that's just something that works for me personally, is having that being, all right, I got to step in here. I got to be the leader. I got to have the confidence, but I'm scared all the time. I mean, it's always some kind of fear and doubt that's creeping in. That's really just natural human nature. Right. So your mind's trying to protect yourself from the challenging things that are up there. And so you go into this fear spiral, and you just have to have a mentality. Your mind really has to get brought up to a certain level in order for you to be able to accomplish these things. So that's really your mind has to go and get to a certain place in order for you to be able to look back and look at the problems before and think they're not that difficult. And so you have to constantly be pushing yourself upwards and just trying things, like even if it fails, not being afraid of the failure. When we started this refinance 25 days ago, I knew there's a very high chance that it would fail, but we tried it anyways. And the entire time, like, I'm going to do every single thing that I can do to push this thing in every way possible. And if I fail, at least I know I left it all out on the field.
Yeah,
and
good.
I think that mentality is what you need. Is I'm going to give it everything I got consistently over and over again, fight every single battle as hard as I can. And if it didn't happen, it wasn't because I didn't try hard to get it done.
Yeah.
Had a reasonable chance.
Yeah, I love that. The phrase that comes to mind is growth happens just outside your comfort zone. I mean, imagine if you're comfortable your entire life. I mean, how much would you grow? You wouldn't really grow that much if you're like always comfortable. So therefore, by definition, growth must happen just outside your comfort zone. Now, you want to stay out of your panic zone. Okay, I've been in there. That's no fun. That's no fun being in a panic zone. But there's a couple things that come to mind by expanding your comfort zone. One is visit larger properties. Like I remember when I first got started, and I had this was even before I did the 12 unit. Just the idea of doing a 12 unit deal was staggering to me. I remember pulling up to this property, 3 levels. It's this box, a cinder block, and I was completely overwhelmed by the size of this building. It was 12 units. And what I found after a couple days of like visiting this property, the building shrunk in front of my eyes. Like it just literally got smaller. I'd already talked to different kind of property managers, inspectors, some blah, 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 some of the tenants. I'd done some due diligence on it, and all of a sudden the building didn't appear to be as big before. And so working with students now, we've noticed something very similar happens. If your comfort zone, let's say, ends at 10 units, go visit a 30 unit. After that tour of a 30 unit, all of a sudden your comfort zone expands. So in other words, there's ways you can expand your comfort zone that don't require 5 or 10 years of single family house investing. That's my point I'm trying to make. The second way is people, meeting other people. Like I remember going to a meetup, a RIA meeting a long time ago, and I hit it off with this guy, and I met him for lunch. And this was before I'd done this deal, and I was going to raise $200,000 or $250,000 to buy like an $800,000 building. And this guy had just sold his company for like, I don't know, 20 million, something like that. And he really wanted to invest with different kind of operators. His problem was he wanted to write $1 million checks. And I'm like, what? $1 million, right? And all of a sudden, my entire mindset shifted from my little problem a second ago to how do I find a bigger deal? And it's only because I found one other person in that relationship. But I think it boils down to this, Garrett, is I think you said it is you're doing all these things, you're outside your comfort zone, you're leaving it on the table, on the field, but you're still afraid while you're doing it. And I think that's the biggest difference. Like, I'm still nervous going out on stage, right? People's like, oh, you don't look nervous. Oh, I'm like completely nervous. But the difference between successful entrepreneurs and ones that are not so successful are the ones that are able to deal and work through their fear. So you're not successful because you don't have any fear. You're successful because you're able to work through them in some way. And I think that's the difference. So figure out a way to work through your fears as well. I think that's absolutely critical. So let's wrap things up, Garrett. Really enjoyed hanging out with you, man. That was fun. A whole episode of banter. Love that. So hope
Just
you guys.
banter.
It was banter, fireside banter. Okay, that's awesome. Yeah, man, that was a lot of fun. And we covered a lot of topics. So hopefully you guys got some value out of that. And with that, we'll catch you next time.